So let's come back to the question that we asked at the very beginning, which is if Australian property market is no longer moving as, I guess, maybe one market, then how should investors actually think about that? Because I don't really believe that it is simply an economic sort of discussion. It's a portfolio discussion, a lending discussion and, ultimately an acquisition discussion. And ultimately, it's a decision-making discussion. So Prabha, you and I often talk about this internally. When people hear the word, divergence, they naturally think, maybe geography, Sydney versus Brisbane, Melbourne versus Perth. But, it's actually much more broader than that, right?
Yes, it is, because the divergence does not occur in only one dimensions. There are several. For example, we are seeing it across several domains simultaneously, and different cities, different price segments, different housing types, and different ownership structures. So many things, and different lending environments. Each of those variables can influence portfolio performance independently, and which means investors should resist reducing today's market's one national narrative.
Yeah. And look, this is why I'd encourage people to stop, asking, ultimately where the best suburb is, right? Instead, what I'd be asking is really 4 simple questions, one after another. And the first question is economic. Where is demand actually strengthening right now? Not where the headlines are, but where is what are the underlying drivers? What's going on in this particular area? Things such as population growth, employment, infrastructure, housing supply. Those are the things that create sustained pressure over time. Not weekend auction results, ultimately.
Exactly. That is why we need to look at the migration data and other infrastructure data, everything, because those data demonstrate a lot of fundamentals. And some markets continue receiving above average population growth, so that's not really interesting, and others do not. We need to avoid them. Those differences influence demand and ultimately influence long-term housing outcomes. Markets with sustained structural demand may respond very differently to other things like monetary policy and other aspects.
Yeah, so I guess, ultimately, before we even, really go about thinking about property, we ask whether the economic story is ultimately improving, right? And if the answer is no, then everything else sort of becomes a little bit harder. The second question has nothing to do really with the market, though. It has everything to do, with a client's portfolio, which is, does every property in your portfolio still have a clearly defined purpose, or have you simply accumulated assets over time without revesting the strategy or revisiting, that strategy that sits behind them?
Yeah, the portfolio concentration becomes increasingly important in a divergent market, so that is very important. And if multiple assets are exposed to the same economic drivers, portfolio outcome becomes more sensitive to those specific conditions. And diversification is not simply geographic. It can also relate to housing type, price points, and demand profiles, different things.
Yeah, look, I think this is something that, investors, they really ask themselves, right? If I was building this portfolio today, would I be building it the same way? Sometimes the answer is simply yes. Sometimes that question changes everything around what you're doing in your portfolio. But ultimately, now that we arrive, I guess, at the part of the conversation that, I think overlooked more often than not, which is lending. Lending to me is really the unsung hero when it comes to investing in property. Get it right, goes well. Get it wrong, it's going to really hurt your cash flow. And so many investors, often believe that finance, exists simply to buy a property, but clearly it doesn't. I think finance exists to create options for clients. And in a market that is diverging, optionality becomes incredibly valuable.
Yeah, the borrowing capacity does not only determine whether another acquisition is possible, and it also influences refinancing flexibility, cash flow resilience, and access to equity as well. When market condition becomes less uniform, the financial flexibility becomes increasingly important.
Yeah. Look, and I guess the biggest constraint I see is not usually a lack of equity that someone has, inside their portfolio. It's a lending structure that was never designed to really support, that stage of the portfolio where that person was at. Quite often we see people that have got, asset rich, cash flow poor, lots of equity sitting inside their portfolio, but unable to sort of unlock that equity to enable forward. And it's the structure that enables them to do that. And so we see people that have, the structure issue, not a market issue. And structure is something that investors can actually control. So, in my view, only now after we've really thought about the economy, our portfolio and our lending, do we really arrive at, the acquisition itself, right? The property is often the fourth decision. It's not the first decision.
That's the thing. Execution becomes increasingly important when markets are divergent. And the difference between selecting an asset supported by structural demand and one supported primarily by sentiment can become much more significant over a full investment cycle. So that is why acquisition discipline becomes more valuable, right? Not less during periods like this.
Yeah, and look, and it's probably the most biggest misconception in property investing, right? People spend enormous amounts of time searching for that next hotspot, quote unquote, right? But far fewer people actually spend time improving, the framework that they use to make those investment decisions. Yet over 20 years, that framework, ultimately matters more than anything else. So if there's one thing that, I guess I would really like viewers to remember from today, it's probably this, is do not reduce a complex market into one headline. Reduce it to better questions. How is the economy changing? How is my portfolio positioned for the economic changes that are happening? Does my lending create flexibility? Does it enable me to continue growing my portfolio or take advantage of opportunities as it presents itself? And finally, is the acquisition that I'm actually moving forward with actually strengthening everything that I've already done inside my portfolio? Because if you ask those questions just once, then the market starts to make a lot more sense within your portfolio. And ultimately, I guess that brings us to the final chapter, because understanding the framework is one thing, applying it is something completely different. So let's walk through, a real world investor scenarios and see how divergence ultimately changes the conversation.
Yeah.